Boo! At the open, all-time high for the S&P 500.
It's your boy Jimmy.
Now, what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil, doesn't make up happen.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning, I wanna turn on this. Becky quick. While the average man looking at it's sad like she fine as yeah. I'm over here looking at tails and whips like yeah, 5'6". I left the mayhem for the market. Now I don't want a dope spot, I want to stop it. I know that booty got dry, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's and pushing hot keys. Strategy and plans to make grand. Still in my wife beater, Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounce. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thought, grow with the marijuana. Waking up with the fun, some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL, making profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. Yeah. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, she pull the trigger and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. and I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them hands, make profits. While I'm still in my sand, making profits. They used to watch me move them packs. Now I watch moves in the NASDAQ. Used to run from the ATF and them cops. Now I run down ETF. Hey, my family. Hey, go, what we doing, my man? Make profits. Hey, Shug, Mike, what we doing, dog? Make profits. Yo, Wolf, Professor, what we doing? Make profits. That TTG money gang. Making profits. We some.
Hey, yo, what's up, everybody? What's going on, folks? Welcome to the True Trading Group live stream. Fantastic day today. Short Apple, long AMD. That's where we made our money today, but we're not really here right now to talk about how we made money today. We're here to talk about how we're going to make money tomorrow, and that might include Palantir's earnings. We are here for Palantir's earnings, guys. We are live. Earnings are out. They are fantastic. This stock is not reacting all that well. There's a reason for it. We'll talk about it right here on this YouTube channel, on this live stream, and I'll explain to you exactly what I think we're going to do with this stock tomorrow. We're going to talk about how we're going to make money tomorrow. My name is Michael Edward Parnine. I go by Michael Edward. I'm the co-founder and head trader of True Trading Group. Now, in case you guys did not know, True Trading Group is the 2024 Benzinga FinTech Award recipient for the best AI analysis tool. Okay. We have a trading assistant. It is unbelievable. It is helping our members make money on a regular basis. There's my business partner and I at the Global Benzinga FinTech Award ceremony, receiving that award. Nice to be recognized by industry leaders for what it is that we are doing, implementing AI technology into our platform to help our members be more successful and to help our members to make money. But True Trading Group is not just about awards. We're the fastest growing and highest rated premium online educational platform. We combine university level trading and investing courses with premium stock market tools. We have live workshops, individual mentorship and coaching, professional level tools and resources all on our platform for our members to use to help you guys to make money. Okay. If you're wondering why you should listen to anything that I discuss on this channel, why should you pay attention to my analysis? It's not because I claim to be the world's greatest trader. It's not because I have a cool painting hanging behind me. It's because I began my trading career on Wall Street, trained by professionals working at T3 Alpha Fund in New York City. They had me go through a training program before they let me touch $1 of the fund's money. And then 2008 happened, which was the Great Recession, the huge stock market crash, but also the same year that I received one of the firm's Trader of the Year awards. You fast forward now, and I'm the co-founder and head trader of TTG, along with my team of 8 other professional full-time trading mods and over 30-person staff. We have helped thousands of members from all over the world reach their goals. We have over 10,000 members in 114 different countries, truly a global community here at True Trading Group. So if you guys are ready to learn, trade, profit for real, you come to the right place. Hit that like button, okay? Subscribe to the channel. Turn on your notifications. Make sure you guys never miss out on any of these live streams. We're dropping golden nuggets on a regular basis. Okay. Now, let's get on over to Palantir's earnings. Okay. Palantir's earnings are out. The stock is down 3.5% here. After that earnings release, stock's trading a little bit to the downside. You might be wondering, well, why? Why is that? The earnings were so damn good, and they really were. They really were. The earnings were fantastic. So here's the numbers. Okay. Earnings per share, 13 cents. That is in line with expectations. Sales, $884 million. Analysts were only expecting $863 million. But here is the best part. Their guidance. They see Q2 sales of $934 to $938 million. That is against analysts' expectations of $899 million. They are raising their full year guidance to $3.89 to $3.9 billion. Analysts are only expecting $3.75 billion. Okay. So these are great earnings. Top and bottom line beat, raised guidance. There's nothing bad that you can argue about. There's nothing more you could have asked for on this earnings report. But the stock is down. Why? The reason why the stock is down, honestly, is because the valuation of Palantir is just incredibly high. It is the most expensive stock in the S&P 500. So the bar and the expectations are set very, very high for this stock to really be able to continue higher from here. All right. The only negative, here's a comment from the CEO. The only negative impact we see in our business is continental Europe's unwillingness to buy the best product as defined by what's succeeding in the most dynamic areas of the US. There's a lot of theory in the market, but when the rubber hits the road, it's value creation when it really matters. And to get 71% growth in the US and the 83 rule of 40, you see that we are downstream from very significant value creation. These are comments directly from the CEO himself, Alex Karp. From Palantir. Okay. So the valuation is high. And I just think this is a matter of, although the earnings were great and there's nothing you can argue about those earnings, there's nothing you could have really asked for. I just think that in order for new investors to come in and buy the stock up at these levels, in order to do that, I think that their earnings needed to absolutely really blow things out of the water, kind of like some of the earnings that NVIDIA experienced over the last 2 years. We had a couple of those earnings reports where they beat analyst expectations. They almost doubled the analysts. They basically doubled analyst expectations. They weren't just raising guidance. They were blowing guidance completely out of the water to the point where the earnings growth was actually so high that the PE of the stock actually went down as the stock went up. And that's what Palantir needs to do. Palantir has to get to a point where they either do share buybacks, okay, so that the price of the stock can move higher without the valuation really moving higher, or they need to have earnings growth that is so incredibly substantial that it will actually have the PE go down as the share price goes up. Because price of PE ratio is literally that, price divided by earnings. So if that the bigger that earnings number is, then the lower the PE ratio becomes as the share price of the stock moves higher. There was a period back during NVIDIA, if we go back and I just show you NVIDIA, when NVIDIA did this move, and I'll show you, when NVIDIA did this big gap up, right? So when NVIDIA did this, okay, NVIDIA was a cheaper stock here than it was here. And the reason it was, even though the stock was at 40, well, this is post split. So at the time it was $400. Right now it reached 40 because they did the stock split. But at the time, the stock was at 300. They came out with earnings. The stock went to 400, but the stock was cheaper. And it was cheaper because the earnings portion of that PE, that number shot up because they beat earnings by so much that you were actually paying a cheaper valuation when the stock was at 400 than when the stock was at 300. And that was what has been allowed NVIDIA to continue this massive onslaught up towards those all-time highs, because their earnings growth was so incredible that even as the share price went up, the PE ratio went down. And then when the PE ratio started going up again, it wasn't going up to levels that were just astronomical and unheard of. Palantir is at a point right now where the valuation is extremely high. And although the earnings report today is a good one, it is just simply not enough aggressive growth to get that PE ratio down. So what happens is current shareholders will take profits on that earnings release, and then you don't have enough new buyers coming into the market at that valuation in order to break this thing out to new highs. That leads you to a little bit of a pop off the earnings print because the earnings were so good. And then all of a sudden the profit taking kicks in and there's just not enough buyers there to sustain and hold the stock up. You're now trading down 6% as you just took out fresh new lows there on Palantir. You can see the initial reaction was to the upside. You went all the way to 130 because the earnings report was good. And then profit taking kicks in because of the valuation, and there's just not enough buyers that are there. So what's going to happen now is you're going to put in place a pretty strong double top now on Palantir, unless something crazy happens during their conference call, unless the CEO says something and everybody just falls head over heels for, you're looking at a double top here on Palantir. Okay. And I would probably expect a nice consolidation now on Palantir. I think Palantir will consolidate in the low 100s now for probably the next few weeks. I don't think that this is a, top out and then crash all the way back to $75. I don't think that's the case. I'm a long-term bull on Palantir. I just wouldn't be comfortable buying the stock at these levels. The valuation is just too high. My average price on Palantir prior to this year was $21.68. I added to Palantir on April 7th at $68, and now the stock is up at 118. Okay. So right now you're looking at a double top there on Palantir, and I would expect probably a little bit more of a pullback off of this. Again, unless the CEO says something on the conference call that just, drives investors, completely crazy, I would say you probably have more of a pullback coming on Palantir. I think that you're probably going to be looking at, more profit taking on the name. And I would expect Palantir over the course of the next couple of days, I would expect Palantir to trade itself back to like 109-ish is what I would be looking for there, and then consolidate. Okay. And I think, Palantir might form a nice new trading range right inside of this level. And then if it does that, you then have the potential for a cup and handle to form rather than a double top. But right now you've got a double top. Okay. So double top right now. And I think that you're probably going to get a little bit more downside. That is Palantir. All right. So this will be on the watch list for us tomorrow. A couple of other stocks that have reported earnings, a big one that a lot of people have been following as of late and that we've traded inside True Trading Group over the last, few weeks or so is HIMS, HIMS, HIMS. And this one gave us a real nice move last week. A lot of our members were able to capitalize on the breakthrough 38. It was very nicely done, went all the way up to $43 today. Now back to 40 after the earnings report came out. Let's go to the intraday chart. Let's pull it up. All right, a little choppy. But here's the numbers. It is a beat, top and bottom line beat, 20 cents earnings per share versus 12-cent estimate. Sales come in at 586 million. Expectation was 538 million. They see Q2 sales 530. Ooh, sales are soft. So this is interesting. Their guidance for the second quarter is light, but their guidance for the full year is okay. So it's a pretty substantial miss on their guidance for the second quarter. 530 to 550 million, which is a significant drop from Q1, which was 586 million. But analysts were expecting 564 million for the second quarter, and their guidance is well underneath that. But then for the full year, okay, analysts were expecting 2.32 billion, and HIMS is anticipating 2.3 to 2.4 billion dollars for the year. All right, so a Q1 beat, a light miss or a miss on the Q2 guide, but they still are optimistic that they're going to beat guidance for the full year, and that is HIMS. What I would look for with HIMS as far as, what's the trade plan is it's got to hold 38. And right now, the after hours earnings print low is exactly 38. Okay, 38.01 is the low of this candle. Now, why are we saying 38? This was actually the breakout point for the trade on Friday. So on Friday, HIMS was one of our watch list longs for the group, and it was a break of 38. And as you hold above 38, you should get some follow through into the 40s. And that's exactly what happened. You broke above 38. It then became support, held above 38 again. And you have this nice, beautiful move up there towards 41. On Friday. A lot of our members were able to capitalize on this and made some really good money on that play. And that comes from just a clear break of the 38 resistance that was a previous pivot top here from last week. And then you can see a little 3-day resistance right there at 38. And then prior to that, here's a 4-day resistance level there at 38. And prior to that, you can see that this level was an area of support. So that's where we got that level from. And that's why we said, hey, if you break above that, that was the long on Friday, and then you got a little follow through on that today, and then you come up with your earnings, and then the earnings pull this thing back on that little bit of a mixed guide, okay? But so far, 38 is holding. As long as HIMS stays above 38, I think you got to stay long-minded with it. Stay long bias. As long as it's above 38, you got a decent short position on the stock, and I think you could see a little bit more upside into the 40s. They did announce that they were bringing in as the new CEO, somebody that was with Amazon for 20 years, and they actually rolled out on the pharmacy side and something with pill distribution with Amazon. That was they headed that entire program at Amazon, and that person's now joining HIMS. I like the company. I think it's a great business model. I think that you should stay long-minded as long as the stock is above 38. and see if this thing can recover and then squeeze into the 40s. All right, that's HIMS. You also had earnings today from Ford, and the stock is trading to the downside here, a little over 3%. We'll talk about that. I actually don't have Ford's numbers. Why do I not have? Why do I not have Ford's numbers? Hold on a second, guys. All right, here we go. Operating profit, $1 billion. Earnings per share, 14 cents. Sales were $40.7 billion. Wall Street was anticipating operating profit of $177 million. Sales were $38 billion. So it is light on sales. So they missed on sales, $38 billion versus $40.7. And they did not give guidance because of the tariff uncertainty. So Ford missed on sales. They missed by $2 billion. Expected to be 40. They came in at 38. And they did not give guidance because of the uncertainty around the tariffs. So stock's down 3.5%, getting punished a little bit for missing on the sales and not issuing guidance. Big resistance level on Ford. There are two massive levels of resistance that are so obvious on the chart. One of them is just underneath 10.5. The other one's up at 11.5. And these are just the two resistance levels that you guys should be focusing on when you're going to be placing your trades. I don't think that these are longs until these levels are really broken. You would need something substantial to get Ford above 1050. If and when Ford gets above 1050, then I would switch to a long-minded setup to take you to 1150. But for now, you are continuously rejecting off of 1050. You guys can see here on my screen. There's also the 200-day moving average. That's the yellow line you see. Here's all that resistance from March. Here's all this resistance from January. Prior to that, you had support in December and November and October and September. I mean, this is just such a major level here for Ford, and it just can't get above it. You came out with earnings. Earnings are your potential saving grace to gap you above major resistance levels. And if earnings are not enough to gap you above a major resistance level, chances are that level is not going to break. So I would stay short biased here on Ford. Possible support at 975, but if 975 breaks, you can look for a little bit more downside. Why is Palantir dipping? Asked Jack. Is it bad guidance? It's not bad guidance. Their guidance was actually fantastic. It is simply the stock is way too expensive. And even though they came out with better than expected earnings, better than expected guidance, it's just a situation where the valuation is just too high. All right. So we talked about the stock was trading around 121, 122. And I had told you guys earlier, if you're just tuning in, I'd mentioned earlier that I do think you're going to get some further downside on Palantir. Their earnings are great. The stock is not down 9%. The stock's not down 9% because their earnings were bad. Their earnings were fantastic. And their guidance was much better than anticipated too. But the valuation is far too high, and the earnings growth was not enough to move that PE ratio down. Okay. So again, I'll give you the numbers for those that are just tuning in. Palantir's Q1 earnings per share comes in at 13 cents. That's in line. Sales are a nice beat, 884 million. Analysts were expecting 863 million. Their guidance for next quarter comes in at a big beat, 934 million to 938 million. Analysts were only expecting 899 million. Then they raised their guidance. Analysts were expecting 3.75 billion. They raised their guidance to 3.89 to 3.9 billion. So they raised guidance. But the problem is the PE ratio on Palantir is absolutely insane. It is the most expensive stock in the S&P 500. And in order to really get this stock to move higher from here, you are going to need a guide on their earnings to be so high than what analysts were expecting so that it can drop the PE ratio so that investors who buy the stock not feel like they're paying top dollar for, the next 3 to 5 years of growth from the stock. So even though the earnings were good, even though the guidance was good, it wasn't enough to drop that PE ratio. And now you're getting a lot of profit taking kick in at the all-time high to create the double top. And that gives you them the pullback. Once people realize that you're not going to break the all-time high with earnings, you then start to get profit taking. And that's exactly what is taking place right now. This is not heavy shorting. It's not, aggressive selling or dump the stock because earnings were bad. It just is profit taking. It's profit taking. Okay. And the way that I would compare it to you guys, the way that I would make that comparison would be you look back at a stock like NVIDIA. Now, NVIDIA, and I want to just go back and show this to you guys. While NVIDIA was experiencing its massive rally from 23 into 24, the stock was actually getting cheaper while the price of the stock went higher. And that's because when NVIDIA would report their earnings guidance for the following quarter was so high that the E of the PE ratio was increasing. And it was increasing at a faster rate than the price of the stock. So as the stock was going higher, the PE ratio was actually going down because the earnings were so high. Palantir that's not what's happening. The price of the stock is increasing faster than the earnings portion of the PE ratio. So the P is increasing faster than the E. And when the P increases faster than the E, you get a very high valuation. So Palantir, listen, I'm a big bull on Palantir. I own Palantir in my long-term portfolio. It is a sizable position. I'm going to own this stock for the next decade, but I am not comfortable buying it. I said this to people on the live stream the last couple of days going into these earnings report. I said, I'm not comfortable buying the stock up here. The valuation is just too damn high, and you're going to need a massive beat on their guidance in order to get that stock to move higher from here. I think it's more likely or more realistic that you get a pullback. I think we actually talked on the live stream yesterday that I think you're probably better off even taking some profit up at the 120s rather than buying more in the 120s. We recently added to our position at 68. And I told people yesterday, if you want to take some off the table up here in the 120s, absolutely nothing wrong with that, because I do think that you're going to get a little bit of a pullback. And that's exactly what we're seeing, right? That's exactly what you're seeing with Palantir here now, as the stock is down 7.5%, 7% here on the day. But when you go back to a stock like NVIDIA, I want to show you, I'll go back here, and this is what I just talked to you guys about. If you guys remember back in 2023, when NVIDIA had this massive gap up, right now my chart says $40, but that's because it's factored in the stock split that they did. At the time, this was $400, right? So when NVIDIA gapped up to 400 after their earnings, the PE ratio here at 400 was actually lower than it was here at 300. And that's because when they reported guidance, their guidance, they like more than doubled analyst expectations on their guidance. So then now the earnings portion of the PE ratio was going up faster than the price of the stock was going up. And that's how you get a runway for the stock to continue higher when that is the case. That's not the case right now with Palantir, and that's why you're getting this little bit of a pullback. Okay. It doesn't mean that I think everyone should sell Palantir. The stock is expensive, and I've said it for quite a while, but a lot of times stocks are expensive for a reason. You look back throughout history, you go back to 2015. Tesla was expensive in 2015. It was expensive in 2016. It was expensive in 2017. It was expensive in 2018. It was expensive in 2019. It was expensive in 2020. That did not stop the stock from going up 2,500%. You look back at Amazon over the last 15 years. Amazon was expensive. It was expensive. It was expensive. That didn't stop the stock from going up 1,000%. Okay. Sometimes stocks are expensive for good reason. I think Palantir is expensive for good reason. I think it's going to stay expensive. I think even when the stock has a significant pullback, it's still going to be considered expensive. But I think that's for a reason. And I'm going to be a shareholder of Palantir for the next decade. I will add on significant pullbacks on the stock every single year. Just like I did this year, I bought more at $68. Okay. So that is Palantir. Your stock's trying to bounce just a little bit here. You got to 112. Now you're back to 116. But this will be on the watch list for tomorrow. I'll take a look and see where the stock settles out after their we'll take a look and see, after they finish up their conference call, we'll see where the stock is. We'll see where the stock is here for Palantir over, once they finish up their conference call. Okay. But I still own it. I'm not selling it. I'm happy I own it. And I have no problem. Obviously, I'm going to continue to buy more. I'm just not buying it here. Okay. I'm just not buying it here. All right. So that is that. What do you think a good buying price for Palantir is? 95. Yeah, honestly, yeah, I do. Honestly, I think 95 would be an okay place to take a nibble. I really love the price that I got. I mean, I'm not trying to sound like whatever. I'm just saying I really loved that price. When we came back in here into, this is a weekly chart, but I really loved this area. And I was happy that I didn't think that we would necessarily get back there. So I am pleased that we did, because I feel like that's a really good spot. And if you do get back to this area, I think that's a great spot. But I'm not sure if you get all the way down there again. If we probably need to have a recession in order for Palantir to get back down into the 60s. But I think that other than that, I do think a decent spot would be like in those high 90s. It's a nice little support level here in the high 90s. You guys can see support. We then broke underneath it. And then you had resistance. And then here's your major moving averages. That's the 50 and 100-day moving average. So, they're working their way up. So honestly, if you do get a pullback on Palantir, I do think that this would be a decent spot if you want to take a nibble on some stuff. I just wouldn't go all in. I would save some dry powder just in case. Like that's what I did. So I added to my long-term portfolio aggressively on April 7th. I added the Friday before as well. So I also nibbled on some stuff. So here, I'm just going to show, I bought my long-term portfolio 4 times over the last 2 months. Okay. I bought a little bit there, and I bought a lot of it here. So this was my largest purchase. This was my second largest purchase. And these were tiny little nibbles. Okay. And I'm very, very happy with where we were buying stuff in our long-term portfolio down here. A lot of the stocks that we bought were already up 30, 50, 75% on, like Palantir, NVIDIA, CrowdStrike, Snowflake, Uber. Uber is an absolute monster, from where we bought down here in the low 60s. When you take a look at something like CrowdStrike down there in the low 300s, it's now 442. ServiceNow was another one. We bought ServiceNow at 700. The stock's now at 976. So, I did that on April 7th, not because I felt that was the low of the year. And this is something that if you're not a member, and we have a lot of people on this live stream right now that are not members. And I want you guys to really understand something that, when it comes to long-term portfolio stuff, and it's, maybe it's fitting because Warren Buffett just announced he's stepping down from Berkshire Hathaway at the end of the year, stepping down as CEO. Will still be chairman, but he's stepping down as CEO, kind of the end of an era of the greatest long-term investor of all time. But when I invest in my long-term portfolio, when I buy, and you guys get all this at True Trading Group, we day trade, we swing trade. We also cover long-term portfolio stuff at TTG. So there's something literally for everybody. We day trade, we swing trade. We also trade stocks, options, futures. We do it all. Okay. But when it comes to the long-term portfolio, I have a very specific set of rules on how I go about adding to my portfolio. And it has absolutely nothing to do with trying to figure out where's the bottom. No professional money manager on Wall Street that does this for a living, that manages billions or hundreds of millions of dollars, no professional actually tries to pick the bottom. But every retail trader on social media tries to pick the bottom. It is a very stupid thing to do. It is a fool's game, and you're never going to get it right. And you're going to royally screw yourself and your family over the long run by trying to do so. What you should be doing is saying to yourself that, Simple rules like it's never as bad as it seems. It's never as good as it seems. The truth lies somewhere in the middle. And when everybody is panicking, that is when you're going to get really good buying opportunities. And do not try to buy the lowest price. Just try to buy a good price. Okay. Instead of you trying to figure out, oh, I'm not going to add yet because I think the stock's going to go lower. That is not the way to think about it. The way that you think about it is, do I like this company for the long term? Yes. Is this a good price? Yes. Is it the lowest price? I don't know. Is it a good price? Yes. And when we were sitting here, I'll never forget it. April 6th, it's right here on this YouTube channel. You can go back and watch my live stream. It's all right here. April 6th, Sunday evening, I'm doing my live stream. The markets had just fallen 10% in 2 days, Thursday and Friday, following the Liberation Day announcement about tariffs. And Sunday evening, futures were tanking again. We were down another 5% to make it 15% in 3 days. And I told everybody on that live stream, and I got a lot of shit for it from people on this YouTube channel that came on that don't know their ass from their elbow, that tried telling me, someone that's been doing this for 19 years, that I don't know what I'm talking about. And I told everybody that day, on Monday, if the SPY is in the 480s, I'm buying a bunch of stuff in my long-term portfolio. I made that announcement. I made it very public. I made it very clear. And then Monday morning, I went in and I just started buying a bunch of stuff. Members in TTG did the exact same, and now they're up a ton on those positions. And I do think if you want to take profits on some of those positions, it's prudent to do so because this is a very significant rally. And I'm not convinced that this is just a bear market rally. I'm not convinced that we're out of the woods. I'm not convinced that everything is just fine. And then now we're going to go back to all-time highs. I actually don't think that we're going to go back to all-time highs. I actually think that we're going to get a pullback. I talked to you guys last night. I'm looking for pullbacks now. I'm looking for shorts to the downside. We got a beautiful short today on Apple, was where I made the bulk of my money today. But I didn't buy on April 7th because I thought it was the low. That's the point. And even if it works out to be the low, I look like a genius. But it's not because I thought I was picking the bottom. It's because I have a very specific set of rules. Okay? Lackey Todd thinks I'm a psychic. I don't know, man. What's Palantir going to open at? Hey, Lackey, what's the weather going to be like September 21st? What's the weather going to be like? What's the high temperature going to be on September 21st? Lackey Todd, do you know? Can you tell me? I'm thinking about having a party. What's the weather going to be on September 21st? Can you tell me? No? What is Palantir going to open at? I don't know, man. Let's wait and see what happens with their conference call. And then I'll wait and see what happens tomorrow morning. And then we'll talk about it. And then we'll figure it out. Okay. Like asking questions like that is ridiculous, right? That tells me that you scour social media looking for somebody that can predict the future. Really good traders don't predict the future. I'm sorry to break it to you. I am not psychic. Nobody that does this for a living is psychic. I can't tell you the exact price that a stock is going to open or close at in 4 days from now, 2 months from now, 3 years from now. Okay. Everybody has their thoughts and their opinions, but nobody actually knows. That's not what being a good trader is all about. Being a good trader is not about predicting the future. Being a good trader is about identifying high probability setups. And then when you find them, you attack them with good, sound, solid risk management over and over and over again to get a consistent result. Once you get a consistent result and you have a strategy that gives you a consistent result, it's just a matter of scale at that point. That's all trading is. When you start trading, you should start small, start on a simulator even, get a consistent result, find a strategy that works for you where you are getting a consistent result, a consistently positive result. And once you do that, you just scale your position size from there. That's trading. I have no idea what Palantir is going to open at tomorrow morning. None. That's it. Like, you guys are looking for the wrong stuff. You're approaching this trading game from the wrong viewpoint. You're looking for a leprechaun riding a unicorn. And when you find that, let me know. I will meet you there. If you ever find a unicorn that is being ridden by a leprechaun, I want you to call me. And I don't care where you are. I don't care where on earth you are. I will get on the first plane to come see this. When you find a trader that can predict the future, call me. Seriously. That's what I think. So, lesson learned. All right. What was I talking about? Investing. Yeah. So my rules when it comes to adding to your long-term portfolio, right? When it comes to adding to your long-term portfolio, I have a very specific set of rules. When we go into a correction, we go down by more than 10%. I always buy something. When we go into a bear market, I buy a lot. If we go into a recession, I then go all in. I have no more cash on the sidelines. So that's what I did this year. We went down 10%. I bought a little bit. We went to a bear market. I bought a lot. Now I still have some cash on the sideline in case we go into a recession. All right. So I'm done adding to my long-term portfolio. Okay. What I added on April 4th and April 7th, that's it. Those are my last purchases. The only way that more money goes into the long-term portfolio this year is if we have a recession, which is definitely still possible. All right. I'm actually expecting a pullback in the market. Over the next couple of weeks, I think the market's going to do this. I think that there is a push-pull that's going to take place over the next, call it 2 to 3 weeks. And I think the push-pull over the next 2 to 3 weeks is going to be the following. What I think is going to pull the market down is a Federal Reserve that, you remember, you have a Fed meeting on Wednesday, a Federal Reserve that is not going to insinuate that they are ready to cut rates. And I think the markets want them to cut rates at the June meeting. And I think the May meeting, they're going to tell you that we're not ready to cut rates. And I think the market's going to be disappointed by that because I don't think the Fed's going to forecast through, I don't think so. I don't think that you're going to, I don't think the Fed's going to give you that. I don't. So that's one thing that I think is going to help pull the markets further to the downside. The other thing I think is a weakening labor market. I think that you're going to start to see some disappointing jobless claims. So last week, we got a really disappointing jobless claims number on Thursday. And it was quickly masked by a strong labor report. But a labor report is a full month worth of data. The jobless claims is week by week. And we have not, over the last several months, had a weak jobless claims report, a significantly weak jobless claims report. For the most part, the jobless claims numbers have been in line with expectations, give or take a couple thousand. For example, the markets are expecting 220,000 jobless claims. The number comes in at 222. We're expecting 218,000, comes in at 215,000. Very, very close to being in line. But last Thursday, you got a jobless claims number that was significantly higher than what was expected. Tens of thousands higher than what was expected. And that's the first time. That's the first time that we've got a really weak jobless claims number. Now, is it a one-off? Is it a one-off and then this week coming up, it's right back to being in line? Or is this the start of a new trend? If you get a weak jobless claims number this Thursday and you get a Fed that tells you we're not ready to cut, that is going to make the markets nervous. It's going to make the markets nervous that the labor market is weakening. We are heading for a recession, and the Fed is going to be late cutting rates, and the Fed's going to act too slow. That's going to make the markets nervous if those two things happen Wednesday and Thursday. So again, what I am watching for is a Fed on Wednesday that does not hint that they are ready to cut, and a weak jobless claims number on Thursday. If those two things happen together, then I think we get a move in the market that takes you back into at least the 540s, maybe the 530s. But I think you at least get into the 540s. Okay? I think you at least get to the 540s. So you're still looking at a, $15 move from here to the downside if in fact that is the case. All right. So that's what I think is going to pull the markets down. What is the force that's acting to push the markets to the upside? The force that's acting to push the market to the upside is going to be trade deals. Trump made comments over the weekend that he thinks that we might be able to announce trade deals as early as this week. Scott Bessent made some comments. He's at the Milken conference out in California. It's the biggest finance conference. Everyone that is, all the big heads in finance, they're all out there. And he also insinuated, made some comments that we are very, very, very close to signed, finalized deals with a couple of different countries. So I think between this week and next week, I think you're going to start to see some deals get announced. And that's going to be an upward force on the market. But really, it all comes down to China. China's the one that matters. And that's going to be a very, very long, lengthy negotiation process. Very long. So I think that the pull on the nervousness of a Fed that's not ready to cut, and if you get a weak jobless claims number, I think the pull on that is downside. JP Morgan came out with an interesting note today. Some of the traders on the trade desk of JP Morgan actually are talking about a possible short squeeze in the S&P to take you back to 6,000. 6,000 would put you all the way back up here, which would just be absolutely insane. You'd be a stone throw from all-time highs if that were to be the case, and you'd actually be back to green on the year. And the reason why JP Morgan hinted towards that is because there is a very large short position on the market in the hedge fund community, going into Liberation Day and then shorting on the bounce back. So there's a lot of short positions in this market. And if you do get positive trade deals, and let's say you don't get a weak jobless claims number, and let's say Jerome Powell does hint that they're ready and they're considering cutting rates soon, then that's going to give you a perfect storm for a short squeeze. And I know a lot of people don't want to think that the markets can move higher from here because you say, well, how can that be true? I mean, we're not in a better place now than we were at the beginning of April. And that all is true, but market function and market dynamic, there's a large short position on this market. And if they get, a news cycle headlines that, because all those things are possible, you can't tell me that it's not possible that we don't get over the next 2 weeks, a deal with Japan, a deal with India, and a deal with Vietnam, and negotiations progress with the European Union. You can't tell me that's not possible. Of course that's possible. And then you can't tell me that it's not possible that Jerome Powell might insinuate that, with what we're seeing, we do think that we're a little bit too restrictive and maybe we're going to cut rates soon if there's some type of a hint towards that. And he can't tell me it's not possible. The jobless claims number on Thursday isn't back to being in line with expectations because it has been for the last several months. If those things happen, you can get a short squeeze. You get a short squeeze. And the S&P 500 can go higher than anybody was thinking that it would because everybody is shorting this bounce. Everybody. I'm literally sitting here telling you I'm ready to short this bounce. A lot of people are shorting this bounce. And if that news cycle is not what you think it's going to be, that's how those people get squeezed. I think that's the least likely scenario, but it's absolutely a possible one. You got to be nimble. In an environment like this, you got to be nimble. You got to be ready to react to news headlines. Don't try to predict news headlines, react to them because you have an extremely headline risk filled environment right now. Headline risk means that the markets are moving off of frequent news headlines that come across the wire that you can't necessarily predict. It's not like a chart pattern or it's just the markets are just chugging along and all of a sudden a tweet comes out and the markets just fly, right? That's the risk you have in the markets right now. So those are my thoughts on what we have going on in the overall market, but be ready to react to it. Don't try to predict it. That's what our members are doing. That's what we do. We'll teach you guys how to do all this. And it's the reason why our members are successful is because they're guided every day by myself and 8 other professional traders. We share our screens. We trade with you live. answer questions, give you market commentary and analysis each and every single day, send out real-time push notifications when our mods enter and exit positions. And that's why so many of our 10,000 members from 114 different countries are able to make money on a regular basis. And you shouldn't just believe me because I say that. You should believe me because our members say that it is true. Okay. That's the case, right? Members of TTG, if you guys are on this live stream right now, do me a favor, type the number 1 if you guys are making money, becoming better traders because of TTG. Just type the number 1. Type the number 1 in chat if you're a member and you guys are making money. Just go ahead. If you are a member, type the number 1. Type the number 1. Tell me if you guys are making money. Very simple. If you are not a member of True Trading Group, you should pay very close attention to how many people you see typing the number 1 on this side of the screen right here. Because every single person that's typing the number 1 is your peer. If they can do this, so can you. If they can do this, so can you. Wow, Argogo, you're new. You just found the channel today. That's incredible. Welcome, man. You're super active in the chat. I appreciate that. Argogo, welcome to the channel, man. I hope you become a member. But you guys can see all these people that are typing number 1. These are all members. These are all members of TG telling you they're making money. If they can do this, and so can you. They're not smarter than you. They're not luckier than you. They don't have more time than you. 82% of our members have a full-time job. So that's not the case. If they're able to do this and make money, then so can you. Part of the reason why they're able to do this and make money is because our AI analysis tool, our AI trading assistant, is the best damn AI tool that there is in the industry. And I'm not even kidding. I've tried them all. I've tried like 10 different AI tools, 10 different AI trading assistants. Oh, nice. Trading with the family. Oh, wow. Your username is trading with the family. That's literally what we say in True Trading Group. I don't know if you know that or not, but we literally say in True Trading Group that you're trading with the family. It's literally what we say. That's awesome. Just for that, I hope that you come. I hope that you join. I hope that you join. That's awesome. But yeah, so that AI analysis tool, I've tried them all. I've tried like 10 of them. I've tried, the generic ones like Perplexity, Grok, ChatGPT. They're not that great because they're too general. They're not like fine-tuned for trading and investing. Then you have some others that are fine-tuned for trading and investing in finance that are okay, but none of them have the capabilities that ours has. Guys, we have a partnership with OpenAI. We have a partnership with the NASDAQ, and we have a partnership with Benzinga. We have a partnership with Unusual Whales. We received the Benzinga FinTech Award for Best AI Analysis Tool. There is a reason. Oh, way better than Trade Algo. Yeah, James saying is I tried Trade Algo. Ours is the best. Trade Algo didn't win the award. True Trading Group did. So Trade Algo was up for the award too, the Benzinga FinTech Award for Best AI Analysis Tool. We won. So, and again, I'll show you. We'll pull the picture up again. My business partner and I were actually at the FinTech, the Global FinTech Award ceremony, receiving the award, and there we are, right up on stage there, receiving the award for Best AI Analysis Tool. Right. So there's a reason why we have all of these companies have agreed to partnerships with us. There is a reason why, Benzinga recognized what we're doing with our AI product and gave us the award for it. And it's part of the reason why so many of our members are making money, as you just saw. And we've done something very new recently because of the success that our members are having with this AI tool. We actually are allowing people to join True Trading Group and actually gain access to the AI tool with their membership, because the way that our business model works at TTG, normally it's an annual membership to True Trading Group. And then if you want the AI tool, there's an additional cost for the AI tool that your membership does not include the AI. Your membership includes a ton of other stuff. Like it includes all of our courses, Benzinga Pro's newsfeed, Trading Views charting software, the Trade Idea Scanner, unusual options activity, options flow, dark pool data, short data, congressional trading data. All of that's included with your membership, but the AI tool is extra. But we've had so many members talk about how much success that they're having. We actually started doing something for the very first time. We're allowing people to join True Trading Group instead of locking yourself in for a full year. Okay. We're allowing people to join for just 90 days. And we are including access to the AI product and to the AI tool from day one. So you guys can join, you guys can use it, see why we received the award, and use it. Use it for yourselves. You guys have 90 days to do so. So you guys can go to ttgoffer.com. You guys get access to all of the courses, the chat room, the trade alerts, obviously all of that stuff. But you will also get access to the AI product for 90 days. Again, you can go to ttgoffer.com. Everything on that page is included. If you guys are unhappy after the 90 days, I'll give you another 30 days for free. And then we also offer a double your money back guarantee on the annual membership. After your 90 days are up, if you decide you want to be an annual member, we'll give you guys a double your money back guarantee. This is how it works. I stand behind the platform and the products that we've created with over 10,000 members in 114 different countries. We know it works. I believe in this platform's ability to help you reach your goals, that anyone that joins our annual membership, if you can't make enough winning trades with us to equal what you paid for your annual membership at least once, we're going to give you guys back double your money. I'm being dead serious. So for example, if you paid $1,000 for the year and you can't make $1,000 back, we'll give you back $2,000. Our refund rate is less than 2.5%. Our retention rate is well into the 70s. And that's why I have no problem offering you guys double your money back. Again, it's ttgoffer.com. Everything on that page is included. You guys have any questions, text us 1-888-621-2127. Again, that is 1-888-621-2127. Phone number is right down there at the bottom left of your screen, 1-888-621-2127. Okay? Simple as that. ttgoffer.com. Everything on that page is going to be included. And you'll get the 90-day access to the AI. See why guys, see for yourselves. Don't take my word for it. See why we received the Benzinga FinTech Award. See why we have a partnership directly with the NASDAQ. See why we have a partnership directly with OpenAI. See why we have a partnership directly with Unusual Whales. Find me another company that has those things. You can't. You can't, because it doesn't exist. Go to ttgoffer.com. Everything you guys get access to is on that page for 90 days. And again, remember, okay? Okay? Remember, the 90-day membership, okay? You get access to everything for 90 days. After the 90 days are up, there is no automatic renewal. There's no automatic upgrade. You're not charged again if you forget to cancel. It just expires. If you want to stay and you want to become an annual member, you have to process that transaction yourself. There's no automatic charge if you forget to cancel. We don't play games like that. All right. Any questions, text us 1-888-621-2127. Again, that's 1-888-621-2127. And then go to ttgoffer.com. That is ttgoffer.com. Anybody have any questions for me before we break? Great trades today on Apple. Beautifully done. It was a great trade for us. Trade of the day on Apple. It was a pretty straightforward setup, man. You had the big gap down. You tried to rally off of a minor support level and could not do so. You know, here's your support level on Apple. Tried to rally off it, could not do so. We opened up weak. We went ahead and just pounded things short to fill the gap back to 200 and drift lower from there. And that's exactly what happened. We took the short at, I'll just go back. We took the short, guys, 203.57 was the short. Members took the 200 strike put option. High of the day is 204.10. We took the short 203.57. Members took the 5.9 expiration, 200 strike put. Was good for a 100% gainer. And the thing just fell right out of bed. And we just peeled profits off all along the way, right down into that gap fill. It was a beautiful trade. So big shout out and big congratulations to everybody that caught that and capitalized on that move with me today. FN's earnings, Fabrinet. I am not familiar with this company, but I'll give you the earnings, sure. I am not familiar with this company, but I'll cover the earnings for you. Earnings, $2.25. That is a miss. $2.49 was the estimate. Sales were 872 million. That's a beat. Analysts were expecting 856.5 on the quarter. They gave guidance 250 to 279 earnings per share versus 269 was the expectation, which is not good. And they see 860 to 900 million in sales. Analysts were expecting 889. So it's light on the guidance on earnings per share, light on the guidance on sales. And that's got the stock trading down 7%. I'm not familiar with this company from a fundamental standpoint. You have a massive support level in the 140s to 150. But other than that, this is a chop fest. This thing is choppy as all hell. It can never hold the gap up. Every time it gaps up, it gets sold down into hard. So it's a nasty looking chart. But again, I'm not familiar with that company. All right, we'll see if Palantir is able to bounce a little bit during the conference call, guys. But again, I just think that it's a matter of Palantir's earnings were fantastic, but I just think the valuation is just too rich right now, and that's got some people just taking profit on the name. All right, folks, that's it. Again, ttgoffer.com. Everything on that page is included for just $497 for the entire for 90 days. So $497 for 90 days. You get access to the award-winning AI product and everything that comes with the regular annual membership. If you guys don't want to continue, it just expires after 90 days and you're done. Try it out, see it for yourselves, use it. It'll help you guys make some money. Let me know how it goes. All right. Have a wonderful rest of your night. Subscribe to the channel and smash that like button. I will see you all tomorrow. If you have any questions, text us 1-888-621-2127. Remember, if you guys are unhappy after your 90 days, literally, I'll give you a free 30 days to keep going. And then if you join the annual membership, you guys will get a double your money back guarantee. Okay. If you guys can't make back your membership fee, we'll give you back double that money. All right. But we'll talk to you guys about that after your 90 days. But do that first. Use the AI, see if you like it, make some money with us, and then let's kick some ass together and join it for the year. Join the other 10,000 members from 114 different countries. Simple as that. Let's do it. All right, guys. Have a wonderful rest of your night. Take care, everybody.